Join us now with more on the markets. Chris Verrone, Strategas partner and chief market strategist. You're not very excited at all, right? We're churning. We're churning. We're churning, and there's some groups that you'd say what you call them unenviable because they're looking like not so healthy, and other groups look a little bit better. But it's all market internals at this point. Overall, 6,000 to 6,100. What, we could be here for a while, given the political backdrop? Is that what's called?
Well, I think that's right, Joe, and we have been here for a while. We've been here since the second week of November.
How about the S&P, by the way?
Yeah, this is a market that's been churning under the surface. There are certainly the strong parts here. The financials and the banks have continued to act great in spite of it all. I think that's certainly important to note. Credit conditions remain remarkably benign here, so I don't think the credit markets are really seeing anything too ominous or sinister out there. But then you juxtapose that with, frankly, tech has lost relative leadership here in a pretty meaningful way, and that's not a new story. I mean, tech peaked relative to the S&P back in July. So we're 6, 7, 8 months into that leadership change. The autos and the housing stocks, I think it's notable they haven't really responded to bond yields moving lower. So it is a very, very split tape under the surface. Not uncommon in a new term for the market to churn those first 100 days. So we're working through that. I think the big tells here, does credit deteriorate from here? I think if credit begins to deteriorate, it raises the prospect that maybe there's something more sinister playing out under the surface.
So if we get above, 100 days, this is typical after an inauguration. You say. If we get above the 6,100 area or resistance, what do you watch then? What do you want? You want a broadening? You want it to go back to tech?
Well, I think importantly what we need to see, and what's been anemic for basically 6, 7 months, is the momentum under the surface. We have not seen that big expansion in new highs. We have not seen the broadening out. I think if you're going to really believe a breakout above 61.25 that can carry you with some runway to 64, 6,500, you need to see the momentum, the internals, really start to improve. I think importantly, as all this has gone on, though, we have not lost the financials. That is so key for us here, where if something really nasty is out there, I can't imagine Goldman or Morgan Stanley or Bank of America would be making new highs, and not just the U.S. ones. I mean, look at the European banks. They continue to work here. The Japanese banks continue to work. So whatever this market is dealing with and has been for the last couple months, it doesn't seem to be a financial issue, which I think is a really key point.
Meaning you don't think it's an economic issue or a weakness in consumers or businesses along
Yeah, and you know, Becky, I think one of the things that's also along these lines, despite this kind of risk-off tone or tape the last few months, consumer staples have done nothing here. So if you're looking to staples to be the market's messaging that the economy is on the cusp of some meaningful slowdown, you certainly haven't seen it through those stocks. I mean, aside from tobacco, which is basically one name, the staples have been off the playing field and remain off the playing field. We like to watch the discretionary versus staples pair, and we equally weighted, so it's not Amazon versus Walmart. I mean, that continues to make new highs. I mean, that, I think, has been as good of a market tell on how it perceives the economy as almost anything out there. That largely remains in nice hands.
So you claim, I can't confirm, but you claim you've been bullish on gold for 2 years, so we're seeing a breakout. And you actually say that, who would have thought that the pet rock, which is a good word for gold. I hear it used for Bitcoin. People call it a beanie baby or a pet rock. But gold really is a beautiful, distinctive type of rock, of an element, right? It's a pet rock, but it's outperformed, in your view, AI represented by the QQQ. There's some AI that's outperformed it, but...
Sure, but I just think it's pretty remarkable. There have been two stories running parallel at the same time. You have the AI story, the tech story, the Qs, which have been dominant for a long time. Gold has been just as good. If you look at gold versus Qs over the last month, 3 months, 6 months, 1 year, 2 years, gold's actually been better. So that's not to diminish what NVIDIA has done or what tech has done. I think it's to emphasize there's been this parallel macro story as expressed through gold that's been just as important in this environment.